Welcome back to another episode of the Ontario Mortgage and Real Estate Insights podcast. I am your host, Steve Hamoin. Today, we have some fascinating developments to discuss in the real estate market, particularly focusing on Mississauga and the Greater Toronto Area. As the provincial real estate market continues to shift over the summer, so has the landscape of property listings. According to the real estate research team at WAHI, due to an uneventful and sluggish spring market season, an abundance of property listings have flooded provinces nationwide, and cities in Ontario are no exception. In central Toronto alone, there are 24,000 active property listings available throughout the city. This signals a substantial shift to a buyer's market that has not been seen in Ontario in over a decade. Data collected on behalf of the Canadian Real Estate Association also points out that, on a national scale, home sales have been down by nearly 6% when compared to last year. As a result, potential buyers have never had so much in the way of choice concerning bargaining power. According to WAHI's report, the market is in such a state of flux that a home in Oshawa recently sold for $800,000 below the asking price. Additional data also indicates that in the Greater Toronto Area alone, 71% of listed homes in residential areas fell heavily into an underbidding territory, with the neighborhood of Mineola and Mississauga taking first place with a median underbid margin of $250,000. WAHI's data then went on to summarize that condominiums retained dominance when it came to underbidding behaviors in the Greater Toronto Area, with an underbidding standard of 90%. Detached family homes, however, maintain an underbidding standard of 57%. So, what does this mean for buyers and sellers? For buyers, the current market conditions present an unprecedented opportunity to negotiate prices and potentially secure properties at a much lower cost than initially expected. On the other hand, sellers might need to adjust their expectations and strategies to attract buyers in this competitive landscape. That wraps up our segment on Mississauga taking first place for underbidding standards in the Greater Toronto Area. Stay tuned as we dive into more real estate insights and trends affecting Ontario. Canada's main stock index hit a record high on Tuesday after domestic annual inflation eased more than expected in June, boosting hopes for another rate cut by the Bank of Canada. The TSX Composite Index jumped 166.55 points to pause for lunch, Tuesday at 22,918.23. The Canadian dollar leaned back 0.07 cents to 73.04 cents United States. In corporate news, Tech Resources on Monday amended its cash tender offers by increasing the maximum purchase amount to approximately $1.38 billion from $1.25 billion. Shares in Tech retreated 25 cents to $68.14. Barrick Gold shares rose 0.7% after the Canadian miner's second quarter gold output climbed almost 0.9% from a year earlier. In the economic data Monday, Statistics Canada reported the Consumer Price Index in June rose 2.7% on a year-over-year basis, down from a 2.9% gain in May. On a seasonally adjusted monthly basis, the CPI rose 0.1% in June. Canada Mortgage and Housing Corporation reported the total monthly seasonally adjusted annual rate of housing starts for all areas in Canada decreased 9% in June, down to 241,672 units compared to May's 264,929 units. On Bay Street, the TSX Venture Exchange gained 5.54 points to 609. All but one of the 12 TSX subgroups were positive midday, with gold stronger at 3%, information technology climbing 2.4%, and materials chugging ahead at 1.6%. Only energy fell short, down 1%. On Wall Street, the Dow Jones Industrial Average advanced to new highs on Tuesday as the market rally continued broadening out beyond big technology names on hopes of forthcoming interest rate cuts. The 30-stock index vaulted 527.56 points, or 1.3%, to 40,739.28. The S&P 500 index picked up 17.87 points to 5,649.09. The Nasdaq faded 11.56 points off its lows of the morning to 18,461.01. Bank of America chugged 5% higher, and Morgan Stanley jumped more than 2% after earnings came in ahead of analyst forecasts. They are the latest household names to post quarterly financial results as the new reporting season kicks into gear. AI darling Nvidia and software giant Microsoft each dropped more than 1%. Retail sales data also came in better than anticipated, which could ease concerns that the consumer was buckling. June sales were unchanged, while economists polled by Dow Jones predicted a decline of 0.4%. Excluding autos, sales rose 0.4%, a larger gain than the 0.1% consensus forecast. Prices for the 10-year Treasury strengthened, lowering yields to 4.19% from Monday's 4.23%. Treasury prices and yields move in opposite directions. Oil prices dipped 96 cents to $80.95 United States a barrel. Gold prices gained $37.50 to $2,266.40. Futures for markets in Canada's largest center were flat on Tuesday, as gains in gold were offset by falling crude prices, while markets awaited the domestic inflation data for more clues on the next move by the Bank of Canada. The TSX Composite Index surged 78.16 points to conclude Monday at 22,751.68. The Canadian dollar stayed put at 73.11 cents United States. September futures subsided 0.04% Tuesday. In corporate news, Tech Resources on Monday amended its cash tender offers by increasing the maximum purchase amount to approximately $138 billion from $125 billion. In the economic data Monday, Statistics Canada reported the Consumer Price Index in June rose 2.7% on a year-over-year basis, down from a 2.9% gain in May. On a seasonally adjusted monthly basis, the CPI rose 0.1% in June. Canada Mortgage and Housing Corporation reported the total monthly seasonally adjusted annual rate of housing starts for all areas in Canada decreased 9% in June, down to 241,772 units compared to May's 264,129 units. On Bay Street, the TSX Venture Exchange edged ahead 0.85 points Monday to 594.55. On Wall Street, S&P 500 futures edged higher on Tuesday after Bank of America's stronger-than-expected earnings report excited investors about what the new reporting season would bring. Futures for the Dow Jones Industrials gained 16 points to 40,530. Futures for the much broader index took on 7 points, or 0.1%, at 5,690. Futures for the Nasdaq Composite progressed 40.75 points, or 0.2%, to $20,224.50. Bank of America rose more than 1% before the bell after earnings came in ahead of analyst forecasts. It is the latest household name to post quarterly financial results as the new reporting season kicks into gear. Those moves follow a winning day on Wall Street that pushed the Dow to all-time highs. Investors bet that the unsuccessful assassination attempt on former President Donald Trump would be a tailwind for the Republican presidential candidate and his party in November's election. A victory for the GOP at the polls could pave the way for favorable tax and fiscal policies for investors. Investors will watch for June retail sales data expected Tuesday morning. Economists polled by Dow Jones are anticipating a decline of 0.4% from May, but an increase of 0.1% when excluding auto sales. Data on import prices and the housing market is also on the docket. In Japan, the Nikkei 225 index returned to trading after a long weekend to gain 0.2%, while in Hong Kong, the Hang Seng fell 1.6%. Oil prices declined $136 to $80.55 United States a barrel. Gold prices brightened $15.80 to $2,144.70. Now, onto a more somber note. The Sagkeeng First Nation has recently faced a significant setback in their efforts to support and protect Indigenous women and girls. A lot that was intended to be used for the construction of a crucial women's shelter will remain empty after the Canada Mortgage and Housing Corporation denied their proposal. This denial comes as a blow to the Sagkeeng community, which currently has the highest rate of missing and murdered Indigenous women and girls. Community leaders have been working tirelessly to address violence and support healing in the community, and this Women's Center was planned to be a cornerstone of those efforts. Sagkeeng First Nation Councillor Tanya Bunn expressed frustration over the lack of clarity in the rejection. Our proposal was a Class C and they wanted a Class D, and they did not really clarify what that meant, said Bunn. The First Nation believes that this denial hinders grassroots efforts to protect and empower First Nations women and girls, directly undermining the National Inquiry Call to Justice 4.6, which urges funding for community-based services addressing violence against Indigenous women, girls, and 2SGBTQIA people. Deputy Grand Chief Betsy Kennedy emphasized the critical need for such centers. We need this to help our members because it has always been difficult, and having them leave to live in urban areas is challenging, said Deputy Grand Chief Kennedy. The Canada Mortgage and Housing Corporation's Shelter Initiative for Indigenous Women and Children currently allocates $44.8 million for 10 on-reserve shelters across Canada and 2 shelters in territories, while the Women and Children's Shelter and Transitional Housing Initiative provides $250 million for general shelters. Councillor Bunn pointed out a disparity in funding, noting that there are a lot of facilities being built in the city and money flowing to the city while there is not for the First Nations. Sagkeeng is demanding that the government take responsibility and action for the denial, holding out hope that their Women's Centre will eventually be approved. City News reached out to the Canada Mortgage and Housing Corporation for comment, but has not received a response at this time. This story highlights the ongoing challenges faced by Indigenous communities in securing essential resources and support. That wraps up this episode of the Ontario Mortgage and Real Estate Insights podcast. Thank you for joining me, Steve Hamoan, and stay tuned for more updates and insights on the real estate market and beyond. Until next time, take care.